Okay, hey, welcome guys. It is Wednesday evening, May 21st, in preparation for Thursday, May 22nd. We are going to finish up with Paul Tudor Jones. There's just a little bit left in this section or this chapter of the book. Again, as a reminder, the book is Market Wizard, Interview with Top Traders by Jack Swagger. He's in the process of finishing up interviewing Paul Tudor Jones. Um, yesterday I said, and start off with what I finished with yesterday. Yesterday he said, everything gets destroyed 100 times faster than it is built up. It takes one day to tear down something that might have taken 10 years to build. He's talking about the economy and the shorting versus long and things like that. So, but let's jump into tonight. Jack Swagger asked, do you feel that a good system can compete with a good trader? Paul Tudor Jones says, a good system may be able to trade more markets effectively than a good trader because it has the advantage of unlimited computing power. After all, every trade decision is the product of some problem-solving process, human or otherwise. However, because of the complexity in defining and interacting and in a changing market pattern and the changing market patterns, a good trader will usually be able to outperform a good system. Um, I'm skipping through a bunch of sections here, and I'm just going to get into part of his answer here on what he said. One of the things that Tolis had taught me was the importance of time. When I trade, I don't just use a price stop, I also use a time stop. If I think that a market should break and it doesn't, I will often get out, even if I'm not losing any money. So we talked about the time stop. I know Mark Cook talked about the 20-minute time frame that, hey, if you're in the trade for 20 minutes and it's just not working, get out of the trade. Come back, wait for another opportunity. Um, what is the most important advice that you could give the average trader? Paul Tudor Jones says, don't focus on making money, focus on protecting what you have. And then I have a little side note here in the book. See reference back to page 134. Page 134, I have a star next to it, and I'll repeat it again. Everything gets destroyed 100 times faster than it is built up. It takes one day to tear down something that might have taken 10 years to build. And I'm looking at that as far as our P&L. We do good, we're steady, we're churning, we're building it up little by little, day by day, and all it takes is one day to destroy. So again, his answer, the most important advice: don't focus on making money, focus on protecting what you have. Then the last section here is where Jack Swagger is doing kind of a summary of the interview with Paul Jones. He said Jones will automatically reduce his risk exposure to make sure that he never registers a double-digit loss in a single month. The most important rule in trading is play great defense, not great offense. Okay, that is the end of the chapter on Paul Tudor Jones. The next chapter starts Gary Bilefield, uh, Bielefeld, however you pronounce his name. And we'll jump into that starting tomorrow night. Okay, so I wanted to start here. This is the ES.D chart, or the real-time trading hours chart. You notice back here between the 422 and 423, we had a gap up in the charts here. And then again, we had another gap, whether that's an exhausting gap, after this push up here, or not. But we had that gap up here. Well, we're coming back down. We're not quite to the top of that gap yet, which we'll see here on another chart. When you get that gap up, and if it hasn't filled it within 4 days, or 4 or 5 days, then it does have a greater probability of continuing on or staying up above. So I'm kind of keeping that in mind as a caveat, but I'm balancing that with the reason I was bearish coming into this 10th day, yesterday and today, kind of coming into those days with my bearish mindset based on another modeling program that Linda had. So just keep in mind that we have had this gap up. We did not fill it within the first 4 days, 4 trading days, so we'll keep an eye there. Get back here. Okay, so let's look over here at the 15-minute dot B chart or 15-minute gap chart. This shows it a little better here, where we jump from here all the way up here, came back down a little bit that day, only to keep pushing up. We've kind of done this little bit of a rollover here, back down. Well, actually, ironically, we did stop at the top of that gap, and that's where this candle on the 12th opened at 58.50, and our lows today was 58.47.75. So when you look at that, that is almost to the tick, touching the top of that gap there. So will we get a bounce tomorrow or not? Let's go back. Let's jump back over here. Sorry. On the daily, you can see it on this candle chart here. We had pretty good range expansion today. As a matter of fact, it was considered a wide range 4 of the last 4 trading days. The 7, it did not qualify for the wide range 7, and I think that's the dot B chart. Sorry, let me go back to it. There we go. So it did not qualify for the last 7. This one was actually a larger candle, up here than this was down on a 14-40-minute chart, but it was the widest of the last 4. So we're coming into the top of this zone here. So again, I'm just pointing that out to keep an eye on where we are on the gaps. We also here. That was where I was calling that 10th day, 9th or 10th day shorting opportunity. You see that we did have on the LBR 310 an A, a B, and a C pushed up in the 310. This first leg here, this second leg here, and then this third leg of the ABC pushing. The 65,000 tick chart over here, I was showing you we had the move up, the flag, potential box area here. Well, basically what we've done is we've come back down and we kind of tested a little bit below the bottom of that box. Again, keep in mind that we had pretty good range expansion today. Careful being overly short tomorrow, because if you get a big range expansion, you could, not guaranteed, but you could get a little pop initially, or at least, in the morning. That is a potential. The 120-minute chart, which this is that pattern I was showing you that we kind of, came up a little bit of sideways consolidation, but not long enough consolidation given that move up. I wasn't thinking that was a long enough consolidation. Kind of did an M pattern, or kind of an opposite of a W pattern at the bottom of a move. Then we came back up today to yesterday's close, only to fail into the afternoon here. So that was also on this 120-minute chart. Around the 50. Sorry, that must have been a different chart I had that on. Anyway, so that's it there. So let's jump over here to this. This is a 5-minute chart of today's price action. You see that in the Asia session we opened up, basically Asia down, Europe down. Come into the 8 a.m. price point here, 8 a.m. until 9:30. 9:30 opening was a little bit down, but we still a little higher than the Europe down. Then we just took off, to the upside for the U.S. morning. Well, so here's noon. The green dots represent the noontime hour here. And you see we started to break or did that false breakout here at 12:55. So yeah, coming into 1 o'clock, the afternoon session is where we end up breaking down. So again, as a reminder, kind of going back and doing that modeling or seeing it for ourselves, that modeling that Linda talked about, to get back-to-back sessions of, Asia down, Europe down, it is possible to have a U.S. morning down, but it's more common to have down, down, up, down, or up, up. to have 3 or 4 consecutive down sessions. You know, again, talk about the Asia session is one session, the Europe session is one session, the U.S. morning session is one session, and the U.S. afternoon session as another session. So kind of breaking up into 4 different sessions. Just something that you guys just monitor for yourself. Just start looking at it for yourself as you're determining your plays, given what's unfolded in the markets there. Let's see, 5 minutes. Oh, yeah. Also, sorry, jump back here. Oops, sorry. Okay, so when we start hitting these 1400 negative 1400 ticks here, we did 1, 2, 3, 4 different times that we came down here and hit the negative 1400 ticks. So that was pretty significant on the 5-minute chart here. That it started up here at 59.0475, so you know, let's say 59.05 down to 58.67 lows. So I'm this zone here, I'm watching to see, hey, overnight with, you know, so far we're kind of holding up here. If we open up back up above here, or we start moving back above here, that to me is pretty significant, you know, because we had some pretty significant like capitulation type ticks happening here on this push down. So it'll be interesting to see if we find this area, or this, you know, quite a range here, as resistance and move down, or if we kind of play around in here and, you know, kind of move up or a little bit. So that's again, I know that's a wide range to pay attention to, but I kind of have that marked off. I'm going to be monitoring that zone tomorrow. On the internals, let's go over here to the internals. Pull up the tick chart. I thought this was interesting. So on the tick charts, you know, like I said, we pointed out the negative 1,000, but I'm pulling this up just to see the SPY line chart. See on the SPY line chart, most of their moves, now these are daily closes. So most moves are daily close down here, the next one's up here. It's like leaving these spikes, you know. Rarely do you get this rollover type action. You got a little bit of rollover here. You had a little bit of 1-2 days continuation down, then another move up. You know, this could have been viewed as kind of a rollover just because it was a sideways consolidation. But this rollover here, and then the only other one I found was back there. You see this little bit of roll under, you know, it's kind of rolling. Well, then that had continuation. So I'm just curious as to whether these rollovers will have additional continuations down, or will it be, you know, kind of like this rollover 1 or 2 days down and then a little more up before it finally started coming back down. So we're just monitoring that daily rollover on the SPY. Oh, the VIX. Yep, this is something I pointed out last night in the video for those who did watch it. For those who didn't, I'm sorry you lost today, but you know, when you're paying for guru services, it helps to pay attention. Woo! I feel like I shouldn't trade tomorrow after that comment. So I was mentioning how we had this little bit of a divergence here in the VIX, and I had showed on here that the price had actually made that the price here the close here versus the close here versus these two VIX, you know, the VIX here, we were making a little bit divergent. Price was going up while the VIX was going up, and I was suspecting that we'd have that down day come in today, which we did. It was supported with this VIX pushing up. So that, and again, that kind of goes back to watching this LBR 310, kind of getting that divergence here. Will that play out? So I just like forward testing this stuff. That's it. That's all for today, guys. Hey, tomorrow, Thursday, you've got to be nice to me on the chat room. No trashing me. It's my birthday, people. So we will talk again tomorrow. Have a great one. Safe trading, happy trading. Don't go on tilt, and pick your plays, guys. We will talk again tomorrow. Thanks.